Let's talk about silver, because, wow, in 2026, it has been one of the wildest, most fascinating stories in the entire financial world. We've seen these crazy predictions that could triple your money, and at the same time warnings of a spectacular crash. So today, we're going to break down what's really going on. And trust me, this isn't just about numbers on a screen, it's a fundamental battle between paper promises and physical reality. Let's get into it.
Okay, so at the very heart of this whole thing is a giant mystery. Silver's price has just exploded, hitting levels that seemed totally impossible just a year ago. But it's also crashed back down with breathtaking speed. And it's left pretty much the entire financial community scratching their heads and asking one single, crucial question.
Right, this is the question. But here's the problem. The answers from the experts are all over the map. I mean, their predictions are so far apart, it's like they're not even looking at the same commodity. Let's just break down how wide this range really is.
So, on one end of the spectrum, the super bullish side, you've got heavy hitters like Bank of America. Their most optimistic forecast for 2026 is an incredible $309 an ounce. Just to put that in perspective, a price like that would triple your money in less than a year. Incredible!
And look, they're not alone in thinking big. You've got independent analysts like Rashad Hajiev who see an even faster climb, talking about silver potentially hitting somewhere between $240, maybe even $260, and as early as May. All right, now let's pull back a bit to the more, let's say, conservative view. JP Morgan, for example, is calling for an average price of about $81 for the year. And yeah, that's way lower than the other predictions, but you got to remember that's still double its average price from just last year.
And then you have the total opposite, the bear case. The same analysts who see all this potential are also warning that, hey, if this is just a big speculative bubble pumped up by debt, well, it could all unravel and crash, like all the way back down to $50 an ounce.
You know, this isn't just some theoretical classroom debate. We've actually seen this insane volatility play out in real time. Earlier this year, silver rocketed up to an all-time high of over $121, only to get absolutely slammed back down towards 70 in just a few days. So what on earth is driving this chaos?
Okay, to even begin to solve this mystery, we have to get back to the absolute basics. We need to look for clues in the fundamental story of supply and demand. We're talking about the real physical metal here.
And this, right here, is where the story gets really interesting. I mean, just look at this chart. Over half, 53%, of all silver demand on the planet has absolutely nothing to do with coins or investment bars. It's a critical, you could even say irreplaceable, industrial metal.
And we're not talking about just any old industry here, right? Think about it. The green energy transition with solar panels, the whole AI boom that needs massive data centers, the big shift to EVs. Every single one of these world-changing technologies is fundamentally dependent on having a steady supply of silver.
And this brings us to our first major clue in this mystery. According to the Silver Institute, 2026 makes it the 6th year in a row that we've had a major supply deficit. Think about that for a second. For 6 straight years, the world has used more physical silver than every single mine on Earth has been able to produce. That gap has to be filled from somewhere, right? So it's being filled by draining the world's existing stockpiles. It's like we're slowly emptying the pantry.
Okay, so a long-term supply deficit, that's a huge deal. But even that, on its own, doesn't really explain those wild triple-digit price predictions. For that, we need to dive into what might be the market's biggest open secret, the massive conflict brewing between paper silver and physical silver.
So here's the plot twist. The price for silver you see on the news, that's not really the price for a physical bar of silver you can hold in your hand. Nope, it's set by the paper market, these financial contracts that are basically IOUs for silver to be delivered down the road. And here's the crazy part. Some analysts estimate that for every 1 ounce of real, physical silver that's actually available for delivery, there might be over 20 or even more of these paper IOUs floating around.
Now, this whole system of paper promises, it works just fine, as long as not too many people show up at the same time and ask for the real thing. But in January of 2026, well, the unthinkable happened. A massive number of people holding these contracts all at once basically said, you know what, we don't want the paper promise anymore, we want the metal, now.
And the result? In a single week, nearly 34 million ounces of physical silver were yanked right out of the COMEX exchange vaults. We're talking about more than a quarter of their entire registered inventory gone in just 7 days. It was basically a run on the silver bank,
and it put the entire paper system under unbelievable stress.
Yeah, this quote from a trading key analysis just nails it perfectly. The whole system was built on one simple assumption, that everybody wouldn't ask for their silver all at once. But in early 2026, that assumption completely broke. The very foundation of the market just cracked.
And you can actually see this split happening in real time if you look at the global markets. Over in Shanghai, where industry is demanding the actual physical stuff, the price has been holding strong, up near $87 an ounce. Meanwhile, back in the West, the paper price on the COMEX has been lagging way behind. We literally have two different markets telling two completely different stories about what silver is actually worth.
Okay, so now that we have this context, this fundamental shortage smashing up against a really fragile paper market, let's go back to those wild price predictions from the beginning, because all of a sudden, they're about to make a whole lot more sense. The whole debate, all the bulls versus all the bears, it really just boils down to one simple question. Which thing breaks first? The bulls, they're betting the physical shortage is the real story. They think the paper system has to break eventually, causing this quantum leap where the price just explodes to catch up with reality. The bears, on the other hand, think all the speculative debt in the paper market is the real time bomb. They believe a big sell-off could cause a crash long before that physical shortage really has a chance to bite.
So now when you look at a table like this, these forecasts don't seem so random anymore, do they? Each one of these analysts is basically placing a bet on which side of that battle is going to win. That $50 bear case from JP Morgan? That's a bet that the paper market unwinds first. And Bank of America's insane $309 bull case? That's a bet that the physical shortage completely shatters the paper price.
So, okay, after all of this chaos, all these conflicting predictions, what's the bottom line here? What should you really take away from the great silver saga of 2026?
Well, for one, the silver market in 2026 is basically a battlefield, right? It's financial promises versus physical reality. Then you have this incredibly strong real-world demand for silver because all this future tech needs it to work. The price you see every day, it's being set by a paper market that is getting seriously stress-tested by people demanding the real thing. And ultimately, those extreme price predictions, they're just a reflection of this deep, deep uncertainty about which force is going to win out in the end, the paper IOU or the physical metal.
And all of this leaves us with one final, and I think really provocative question that goes way beyond just silver. In our modern financial system, what does price even mean anymore? What is the real value of something when the paper promise and the physical asset are telling two completely different stories? That right there is the billion-dollar question at the heart of the silver market in 2026. Thanks for joining this explainer.